Welcome back to the Fail Breakdown channel. We're here with another trade recap, this time from Tuesday, December 13th, from the morning session, and we're going to be looking at ES, of course, and the 68.40 to 43, bit of a zone there. This occurred about 10:38 Eastern time. And we'll start with a quick review of the context and then get into a replay of the trade setup and execution. So as ever, this discussion is going to be based as best I can on the methodology and strategy taught by Adam Mancini. I'm not an expert, nor am I affiliated with Adam in any way. So if you want the expert analysis, I'd highly recommend subscribing to his newsletter. It's worth every penny, and you can check him out at those links there. Okay, let's get into it. Okay, so let's review the context real quick and then get into the execution. So this is looking at the daily chart. We've had Thanksgiving week the week before. We're now Tuesday, but we had 5 green days in a row last week. And then, as expected, a bit of a consolidation yesterday. But that set up a nice failed breakdown around the 68.25 level. So coming into today, switching over to the 15-minute, excuse me. This is with replay mode activated, and I've got it kind of paused here right before the entry triggers, but we had a nice failed breakdown in here yesterday and a reclaim of the 68.25 level where, the flush of that had kind of tested range support, reclaimed, and then got us long into yesterday, and then into today. We're still holding our runners from that trade. In the evening session, we kind of drifted down, tested range support again. I just about held onto my runner here, and then into the London session, it pushed higher. So by the time we get to the pre-market, we're actually above all of Adam's pre-planned entries, with first down being the 68.25 level and the strength reclaim being 68.34. So we're trading well above these in the pre-market. Nothing to do at this point. And actually in the pre-market, we're above range resistance as well, which is that 68.43 level. And so, yeah, just sit our hands and wait for the flush. Hold that runner. But one thing we noticed right off the open, we push up and test down to 68.40, and then bounce from there from 68.40 up to 57, so a 17-point bounce. So we've kind of got a combination of things going on here that are establishing our significant low to trade around. We have the range resistance, and this formed a little bit of a shelf in the pre-market here between kind of 8 a.m. And 9 a.m. Eastern time. Getting that right? Yeah. Sorry, this is Central time, so I'm doing the conversion. And then we get this 17-point low as well. So then we push up to range support and range resistance, and we actually put in a kind of a failed breakout of the prior day's high up here at 68.55 and start a fairly significant sell-off. And this is when we can start to increase our attention and look for an entry around this 68.40 to 68.43 level. So I'll switch over to the other platform now and we'll get into the execution. Okay, so here we are right before the flush is about to begin. We've got our important levels marked on the chart here at 68.43, which was the range resistance, and you can see it's formed that little shelf in the pre-market. And then after the market opened, we dipped down, set another low here at 68.40, so I added that to my chart, just labeled it the AM low. Just to reiterate the context, we're on the back of 5 green days followed by a consolidation day, and we find ourselves again at range resistance. So there's never going to be a high quality setup up here. And also worth noting that this price region is above all of Adam's pre-planned entries. So we're going to need to improvise a little bit to find levels to trade around, but that doesn't mean we can't, by following Adam's system and his rules, that doesn't mean we can't successfully execute failed breakdowns, especially if we follow the level to level, trading level to level, and keeping our stops below the flush low, so using that structural stop. So I always like to ask myself, as we approach these levels, it's a great sense check, like what would Adam do, what has he done, and what's he likely to be doing here. Of course, we don't know. We'll find out in the newsletter. But my suspicion is, we know he traded that 68.25 failed breakdown yesterday. My suspicion is he probably hasn't had a trade since then. And from his tweet, we can perhaps glean that he may be interested in this 43 level. This is a tweet from earlier. And he's highlighted 68.43 as support. So this may be something that he's interested in engaging, and that's always a great sense check. If you're matching Adam's trades, you're probably doing pretty well. So let's start the replay here. I'm going to start at 10 times speed. And then I'll slow it down once we flush the level. And we'll take a closer look at the acceptance process. So we're just right above the prior day's high here. We're putting in, or about to put in, that failed breakout and start the scary flush. And it happens relatively quickly here once it starts moving. And that's really what you want to see for every failed breakdown is, the scarier the flush, the more enticing it is for people to short. And then, the greater potential for people to get trapped, which is, what we're looking to trade, is to trade those traps. So I'm mainly looking at the 15-minute chart on the right here. I do have the range chart too off to the left, which I quite like for viewing acceptance. Right, I'm going to slow it down to 1 times speed here because we've just flushed through the zone, the 40 to 43 zone. Yes, a reasonable dip at this point. We've come 17 points down in a few minutes. 17 points in about 5 minutes, so good looking flush. Go a little bit faster. Okay, we'll slow it down, and there, a pretty quick poke down to the 34 level, which was another major level, I believe, from the newsletter. And we're going to bounce straight back up to 40 and maybe 42, thereby kind of triggering the start of the acceptance process. So right around here, clock in the bottom right hand corner. This is central time, so call that 9:30 and 45 seconds ish is where we can kind of mentally note the start of the acceptance process. And the key here is, as always, never rush. So you might be excited to try and get in there on that first poke up, but that's definitely not what you want to be doing. Always want to be patient. The early failed breakdown traders are the ones who are going to get trapped to the short side. So definitely want to avoid that. So what's going to happen now is we're going to dip down a little bit lower, kind of completing that first cycle of acceptance where we flush the level, return to it from below. So depending on what you're using, the 40 or the 43, going off the 43 level, you would classify this as type 1 acceptance, where we return to the level from below and then continue to dip after that. Okay, I'm going to increase the speed a little bit here. So running at 4 times speed, we're actually going to break this low by a little bit, but only by a couple of points. And so if this had flushed deeper, maybe to 30 or 25, I would kind of consider that we might want to restart, the acceptance process. But here we basically just bouncing off the same level. So I forgot the time, whatever it was when we first poked back through, but maybe it's been a couple of minutes since then. So yeah, still consider all of this as part of the same kind of acceptance cycle. This is looking quite nice for an entry here. Forget the exact time it triggers, but right when it pokes back up and gets above 43 now is where you'd be wanting to look to enter. It's kind of checked all the boxes. Okay, it's lower quality, so you may want to size down, 75, 50% of your normal size. It's not A grade, B, maybe C grade. I've kind of got these levels marked out as C grade, but it's checking all the boxes. We've got our significant low, that just about meets the criteria. And this low here at 40 that bounced 17 points, held for an hour or so, and then that's kind of coupled along with the shelf of lows at 43. So we've kind of got a bit of a hybrid of a significant low here. And then we flushed it, a nice scary flush. Type 1 acceptance is well underway. We've returned to the level, dipped, we're returning again now. So any sort of acceleration back up through the level would trigger an entry. So at this point, you don't necessarily need to be much more patient if it's going to push through the level. Of course, it might just fail from here, so nothing's triggered at this point. But the acceptance process is there, type 1 acceptance. So now we just wait for price to recover 43 and then enter from there. It's always nice to see some acceleration as it does that, and certainly you want to see good volume. I like to look at this, which is the speed of the tape, measuring ticks per 15 seconds. So what you obviously don't want to see that die off, and ideally you want to see this number increase, and then the delta, which is obviously the difference between aggressive buyers and sellers, the delta go nicely positive kind of as a percentage. So here we're getting some increased activity coming in, and then as a percentage here we're getting sort of 30% positive delta. So this is where, right about here is where I entered. Again, nice delta coming in. So entry anywhere in those last few minutes. I forgot the time it initially poked back. Was it 32? So it's the acceptance process has taken maybe 8, 9, 10 minutes, which is about right, about average for the depth of flush we've had. From the 43, we've had about a 10-point flush. Waited 10 minutes for the acceptance to mature, and then we've entered on slight acceleration back up through the level. This runs nicely level to level. Get a couple of levels out of this one before it ultimately fails and stops out the runners. I think my runner on this trade was somewhere down at 32, which was just a 10% runner by that point, but no big deal. So that's it. That's a wrap for that one. Check out Adam's newsletter, highly recommended, and catch you in the next one. Thanks. Bye.